Hey, welcome to day 16 of Bitcoin Magazine's 21 Days of Data. We're taking some of the best projects from around the Bitcoin community, highlighting them over these 21 days, all leading up to Genesis Day and / Proof of Keys Day, and hopefully getting you excited about what's going on with Bitcoin. It's not always just the price. It's crazy. Today, I've got Ethan Vera with us, who works on multiple things over at Luxor Mining, but one of the things that they produce is Hashrate Index. It's a great website full of mining stats. So you've got the hash rate price, you've got rig index, which is my favorite piece of this. So telling you like the price of all the different mining equipment that's out there and kind of the market, which has changed a good bit. And I want to get into that, of course. Pool information, farm information, all kinds of wonderful stuff. So even if you're not a miner, this is something you should dig into and understand just a little bit more. And that's why we're highlighting it. Ethan, thanks for joining me. What's going on, man? How are you doing?
Good. Yeah, thanks for having me on. Excited to watch the other videos in this series. I think it's a really good idea. And really excited to talk about Hashrate Index too. It really came out like from this concept like 3 years ago. I got dragged into the mining space by my co-founder, Eddie. And he was preparing some like mining material for Guzman and I, my other co-founder, to look over. And there's like nothing. It was like 2 documents. It was like, there's no data or stats out there. It's one of the most, opaque industries out there. And so we figured, hey, why not like add to some of the transparency in the industry and offer kind of interesting new data that's not available out there, and try to help kind of people ramp up quicker than we did, because we really had a tough time like going through information, seeing what's real, what's not, and seeing like exactly what to learn. So hopefully we can help that.
Totally. I think that is, I agree with you, mining side of it. It's for rightfully so, right? This is the economic engine that powers the security of Bitcoin, right? So I can understand why people are cagey about data. But it's also why that's so important for everyone to understand the economics of what's going on as well. So tell me a little bit about Luxor and kind of the overall company before we dive straight into Hashrate Index. You guys are a pool. You're based here in North America. What else do we need to know about Luxor?
Yeah, we started like 3 years ago. Basically, we saw that there's not a lot of good mining software products located outside of China. And that kind of makes sense given most of the hash rate is in that region. But we wanted to fill like this like gap in the market and provide North Americans and Westerners with a non-China based software product, and have like kind of like an English focused user experience. And back in 2017, like none of these websites had English translations. You'd have to like Google Translate it. And so like the user experience wasn't great. And we really wanted to improve on that. Today we run a Bitcoin mining platform, kind of doing like this best price execution for Bitcoin hash rate. We have about 500 or so petahash of SHA-256 hash rate on the platform, putting us at like 16th in the world. So still relatively small in the Bitcoin space, but it has been growing significantly. We were at 40 petahash 2 months ago. So I'm hopeful that we can kind of pierce the top 10 within the next year here. So that's kind of like our revenue generating side of the business. And then our kind of other side is this Hashrate Index, which is, all free data to use, and just like highlighting different indices and different metrics for miners and non-miners to look at.
So, and one of those stats, like the very first stat you come across, is this Luxor hash price index. Tell me a little bit about that. How are you kind of collecting all this information? What are the difficulties in finding all this information? What's on here that's unique specifically to Hashrate Index?
Yeah, and this is probably the reason we started this website, was actually for this hash price index, where we looked at the market and we saw that there's no data sets out there that showed you how much you're making every day over a time series. And so if you as a miner own, say, like a Bitmain S9 machine, how much would you have actually made over the course of the past 3 years if you had that machine plugged in? And so that's the kind of information we wanted to deliver with the hash price indices. What the hash price index does is it measures the dollars per terahash in revenue per day. So if you have a Bitmain S9 and it produces 13.5 terahash, you can determine how much of revenue that would have produced in dollars over the past 3 years of our time series. And so that's what the indices really delivers. And I think one of the reasons this is so important is because it helps miners understand how they're getting paid by the pools and where their mining revenue comes from. It also helps put in this idea that there could be hash rate based derivatives in the future that are based on the value of hash rate itself. So I think there's going to be a lot of cool products that are built on top of these sorts of indices, whether it's ours or other people's. I think that this hash price metric is a really important metric in the industry for miners and traders.
And hash rate derivatives, that's something that I think most people don't touch or have a reason to touch or even think about really existing. Why are hash rate derivatives so important? And why do you think that people will need more of these indexes or indices?
For mining specifically, it's just such a volatile industry. So the value of hash rate, like this hash price, in 2020 was about 3 times higher than the volatility of Bitcoin price itself, which people already think is like a relatively volatile asset, probably less than the mainstream media makes it, but it's still, there's still some volatility there. And so value of hash rate's 3 times more than that, because what goes into the value of hash rate, hash price is the Bitcoin price, difficulty, and transaction fees. And when you add them all three together, it's like it's a real mix that miners have to deal with. And in practical terms, what this means is that every bear cycle of mining, you see a bunch of miners go bankrupt. And that actually happened to us. We owned 40% of a 4 megawatt facility in Kansas City that went bankrupt because mostly we didn't have the ability to hedge out some of these future cash flows. So I think the derivatives aspect of mining is going to be really helpful in how like more miner longevity and lasting some of these cycles. I don't think miners should hedge 100% of their revenue because then they're limiting their exposure to the asset class we're believing in. But hedging out a certain portion just to make sure that they have enough to operate even in down markets, I think is really important to making sure they're around in 5 to 10 years from now.
Yeah, 100%. Very, very important in supporting these miners, especially as we try to grow here in North America, right? Like, and I know that you guys have been focused a little bit on that, not necessarily related to Hashrate Index, but tell me a little bit about some of the growth in North America and kind of what you're seeing. And, are these products like these derivatives actually helping kind of expand that or at least give some type of stable ground for the North American miners to start to develop a little bit more?
Yeah, the industry has this idea that China has superior electricity systems. And it's true that they have really cheap hydropower in Sichuan region and coal up north. But what is often mislabeled is that America is like a more expensive version and you pay for political stability, but inexpensive electricity rates, which isn't true. US has some of the best power sources globally, especially in places like Texas or upstate New York or Montana or Dakotas, leveraging things like stranded gas or connecting directly to power plants or demand response programs. So I think like the US is very well, US and Canada are very well positioned to capture a lot of this hash rate growth, just naturally based on electricity prices here. But this financing angle, I think, is what's really interesting, and that's kind of the story of 2020. Is there's new financing angles available for miners. So traditionally, they had to use debt financing over the past 2 years. Now equity markets are starting to open up. You're seeing that with like guys like Riot, Blockchain, and Marathon Group raising a lot of money to go buy rigs. And now you have ASIC financing, where mining farms can actually finance their operations with the ASICs as collateral, and that opens up a whole new avenue for them. And then in 2021, my prediction is that another financing mechanism is going to come available, which is like a hash rate offtake agreement, where they can sell forward 6-12 months worth of their hash rate production, similar to another commodity like oil producer, and use that as a financing tool to buy the equipment, today. And so using all those different types of financing levers, as well as like the hedging instruments, I think it's setting like a perfect stage for North American development here.
Very cool. And on here on Hashrate Index, you've got farms, some of the farms listed. Tell me a little bit about what's going on. What can we find out in here, and how can we dive in a little bit into what's going on? What's being shown on this page?
Yeah, so on the farms page, we wanted to create this like one single page where you can go and just see like a bunch of different locations that you as a retail miner could go and host at. So today you and I could go, 50-50 in on a machine. Let me know if you're interested. We can go buy it and host it at one of these sites. And it's really that easy for retail to get involved. And the people always talk about the institutionalization of mining, and that's definitely a trend because there is a lot of value in economies of scale. But I do think that having retail focused miners and distributed miners is extremely important. So we wanted to make an effort to highlight that aspect of the industry, that out there are these facilities that will host anyone from one machine to 50 to 100. And so if you want to go buy, a piece of equipment and host it with these guys, you can get up and mining within like a couple weeks. And so we just highlighted some of the good players in North America. There's tons of other ones. Um, some really good sites out there like Compass also highlight them. So yeah, if you're interested in into getting into mining and you don't have good electricity at home, those co-locations could be a really good option for you to go buy a machine and host it somewhere.
Very cool. Let's talk a little bit about rig price. This is an interesting one to me, seeing kind of what's going on. I know that we had, when we had originally kind of emailed back and forth to do this, you said S9s are back to $100 a piece. And I'm like, wow, that's all right. S9s, right? It's the cockroach of the Bitcoin world over here. Let's talk a little bit about rigs and machines. And you've got a rig index in here. You've got kind of the rig price and how that's changed over time. Tell me a little bit about that. And also, let's dive in. As far as I understand, the price of mining rigs change just as much as the Bitcoin price, right? Because they are being priced dynamically based on the demand of the underlying asset of the actual Bitcoin, right? How does that move and flow? Like, why are these kind of rig price indexes just as important as maybe the derivatives or even just the overall hash power?
Yeah, a lot to unpack there. I'm going to take a mental note to work through those items.
Thanks.
So just quickly, why we created this was because the ASIC markets are probably the most opaque part of the industry. You have to connect to a manufacturer who's like selling their rigs at various prices throughout the day. Like they're changing it inter-day, and they're not telling you how many machines they're shipping or when the exact shipment dates are. Then you go to secondary markets, and those guys are constantly changing. They all exist on like Telegram or some channels. There's no website that consolidates it, and so like understanding how much a rig's worth is like incredibly hard because you have to ask like 5 people and try and like sanity check yourself. So we tried to build this rig index so that people can go to one place, see, okay, here's how much these rigs are trading at. Here's my offer somewhere else. Like, and just use it as a sanity check. That's all it's meant to be, is like, this is what the market's trading at. Am I getting a good deal? Am I getting ripped off? Do I need to take a second look at what I'm buying here? So that was the goal of it. And the methodology behind gathering that data was we scrape dozens of different venues, whether it's Telegram channels, WeChat groups, websites, and we aggregate all of that data and try and get like good accurate data on, say, what's the value of an S9 this month, or what's the value of new generation machines this week. So that's kind of the methodology behind it. And there's a lot of things why it's important here, and we'll just kind of move through them. You noted the volatility and like the correlation to Bitcoin price. So a comment on that is that right now ASIC manufacturers price their rigs based on expectations of cash flow. So historically, like Bitmain had a 375-day payback period for revenue. So depending on your future revenue forecast, that's how much like the machine would cost from Bitmain. And so it's a very immature way to price ASICs, but that's kind of how the industry is standardized now, which is like they don't just do cost plus 20%. They do revenue minus like 15% or something.
So is it
to like leave
targeted
some room for
towards
the miner.
like specific days of profitability or profitability? Is that how they're going to look at it in most cases and try to aim at like a 12-month profitability?
Yeah, exactly. They look at like, okay, what are people going to buy this at based on profitability forecasts, and let's price it there. Traditionally, it was like revenue, which isn't the best metric because it should be profit, after electricity fee. And now I think the manufacturers are getting more pragmatic in how they look at payback period and try to price it better so that the miner can still make money and continue to order rigs in the future. They don't want to price it too high that no one makes money.
Do you think we'd see that change? Let's say like a new player enters the market, let's say Samsung or Intel or someone who can develop at a very large scale, right? And maybe I'm completely out out of line with suggesting those two, but someone with enough manufacturing power to really kind of make a dent in the market, if they were to come in with a standardized pricing or a fixed pricing rate, do you see that as a possibility? Is that something that the miners like a Bitmain would be afraid of ever happening, or is that just not plausible?
I think it's definitely possible in the long term. I would say the chances in the next 5 years are probably minimal that a big player like that enters the ASIC space, but it would have a profound impact. So somebody like NVIDIA or Samsung, they're not going to be constantly changing their, like, say, GPU prices based on how much Ethereum mining makes. No, those guys, like, their cost is $1,000. They're going to like charge you 1,500 because they want a 50% gross margin on that. And so I think, like, if they came in, the industry would get a lot more professionalized. It would probably be very bad for Bitmain and WhatsMiner, but very good for the ecosystem. So I hope they come in. I just think it'll take 5+ years and definitely a large run up in Bitcoin for them to actually think about this market, because those guys are giants. I know, like, in Bitcoin we get sucked in and, like, we're the center of the universe, but to those guys, like, Bitcoin mining is just like one part of their business that's still relatively small.
We're gonna have to edit that part of the video, Ethan. Of course, we're the center of the universe. Don't you know that? So, Rick Price. All right. So back to my cockroach thing. S9s. How much is the volatility? What have you seen this year? Kind of, max to min on the price of an S9, for example.
So S9 started the year, relatively high, kind of around that $100 mark. And then after the halving, we saw them fall all the way down to like $20 per rig. And so pretty down there at that point. Like, it's pretty much scrap metal, right? Like $20, including the power supply unit. The power supply unit can go for 10 itself. So almost at that zero value. And then recently, in the past 2.5 months, we've seen an incredible run up of those S9 prices, all the way heading back up to $100. And the reason is because right now ASIC markets are so supply constrained. Bitmain is in shambles right now because of their management shakeup. WhatsMiner is pumping out as much as they can, but it's not enough to meet demand. So there's so limited ASICs right now, and no one can get their hands on it, that S9s have now become once again very valuable. And also right now you can mine with them up to 7 cents a kilowatt hour and still be profitable. So a lot of the guys who have facilities at 4 cents are just plugging in S9s, and they're really benefiting from it. Some of the cool parts about S9s too is, like, a lot of them end up in Venezuela, and we have a partner pool down there now that we work with. And these S9s, this is a really cool Bitcoin story, but an S9 makes more than an entire average family in Venezuela. So these S9s are ending up in Venezuela. They're plugging them into free power, and they generate over like $1 US per day, which in many cases, because of the hyperinflation of the bolivar, is higher than the entire family's making. And so this S9 can support an entire family, which we think is pretty sweet. And, like, you'll see families with even just like one machine plugged in. But one of the problems with this is that demand has meant that the machines have doubled in value in Venezuela. So in the US, you can buy them for $80 to $100 a rig right now, as of I think Monday morning. In Venezuela, it was like $200 a rig. So that is being reflected in the capex spend.
Very interesting. I did not know that. That's a very cool story. You also have on here on HashrateIndex.com/machines, kind of an index of all of the different kind of major machines that you'd see out here, right? And the daily rewards prices. What's the big thing? What are people looking for right now, as far as like best daily reward profitability as far as these machines?
I think this really depends on who you are as a mining firm. And this kind of relates to maybe a next topic we can talk about, which is public mining companies. But public mining companies right now have this incentive to increase the amount of revenue and hash rate they have. And so at all costs, let's bump up how much hash rate, what percentage of the network we have, regardless of the profitability. And
Right.
because that's how sell side analysts are covering these stocks right now, is on an EV to revenue basis. So, for every dollar of revenue they get like an increase of like 5 to 6 times market cap. And so those companies are just trying to cram in, buy as many thousands of the new generation machines straight from Bitmain and WhatsMiner, regardless of like the capex spend. And so that's kind of their strategy, and that's what's done them well in the public markets. Whereas there's smaller private organizations that will try and play the secondary markets, and pick up cheap machines like the Bitmain T series, like T15 and T17. You could get those for like $7 a terahash like last week. And those were incredible buys because they could basically pay back in like 150 days versus some of the new equipment. If you're looking at it, it's like, a year plus. So I would say like, depending on which type of miner you are, if you're just strictly targeting profitability, the used markets are incredible right now to find like really good opportunities in.
Very interesting. What else is on here that we really need to be paying attention to, or what can we drill down into that really makes Hashrate Index unique? Now, all of the stuff is unique. That I will say, going back to kind of the very original point that we made, this is the most opaque part of the entire industry. This is the hardest to get someone on the phone as a reporter or a journalist. I know that. Um, it just is not out there. People do not pick up. People do not give away information that would, ruin their competitive advantage, right? You got mouths to feed. So what's in here that's maybe the most important thing for someone like me, who I'm not a miner, right? But I care, right? And I'm interested in it, and I want to learn a little bit more. Where should I be looking? What's interesting or the most interesting?
Yeah. It's hard to pick favorites. It's like picking your favorite child. But one of the really cool use cases, the rig price index that we haven't really touched on yet, and relating back to our piece on ASIC financing. So these financiers take ASICs as collateral, but that collateral is extremely volatile. Like the S9 price itself was 25% more volatile than the price of Bitcoin this year. So how do you as a financier manage that kind of collateral on your balance sheet? And so that's what I'm really hoping that the rig price index helps financiers come in and be like, okay, here's how much that collateral is worth, 3 months later and 4 months later, and start to make some estimates as well as like manage current collateral relationships. So I hope that Indices starts getting used by these ASIC financiers more. And what that will do for the industry is it'll get more financing in the industry because now they have more comfort around their collateral. They can offer lower rates. They can raise more from their LPs, and ultimately will add more hash rate to North America, I think. So I'm super excited about that. And then one of the really exciting things I'm like moving forward is like our stocks V2 page. So right now we have a database of publicly listed mining companies, and there's about 27 of them in the database right now, which a lot of people don't realize there's 27 public mining companies, but there are quite a few.
Yep.
And so for our next version, we're going to start aggregating some of the data around the prices. So like creating like, an indices of public mining stocks, but also the valuations. So tracking like, okay, if you have, $10 of revenue at your mining farm, if you're a public company, what would your valuation be, and so forth, so that private miners can start getting a sense of like, okay, I run a 10 megawatt facility and this investor approached me to sell it. How much should I be looking at to sell this for, considering like these valuation multiples out there? So yeah, that's like another angle I'm super excited about.
Yeah, 27. I when I first looked at this, I think most people aren't familiar with the riots and the marathons. That is like, they're not household names by any means within the community. But if you go and ask people outside of Bitcoin, those two plus GBTC generally kind of show up, anecdotally. Argo, Bit Frontier, Bit Farms, Bit Digital, right? These are the first, three on there. Those aren't normally the ones that are coming up. So this is definitely great information to be able to see this kind of in one, screen, not necessarily a dashboard, but kind of one page here together.
Yeah, it's a super interesting way to gain people from outside the Bitcoin industry too, because like we've seen with Grayscale, like people value having that ability to invest into a Bitcoin asset through their traditional methods. And so if you invest in a company like Argo Blockchain, which accumulates Bitcoin on their balance sheet, and you can get exposure to them in your 401k or whatever, they're based in London. So all these UK investors can get exposure to the industry through Argo. I think that's super cool because, that gets them hooked into Bitcoin. Argo does well, and then maybe they want to buy their own machine and start mining their own Bitcoin eventually. So it's a really good like on ramp from like no coiners to eventual coiners.
So on Hashrate Index, guys, you can go on there and see everything from the what's the latest and greatest mining rig out there? What am I going to look at from a daily profitability expectation in some way? Get some type of scope there. You're going to be able to look at the public market and stocks that you can invest in as proxies instead of owning the underlying asset, Bitcoin. You can look at Hashrate Index just to see kind of how that's ebbing and flowing over time. And you can look at what are the farms here in North America that if, let's say, you wanted to join, you could start to kind of scope that out for maybe a colo situation, all in kind of one place, which is pretty phenomenal. Also on here, a big thing that I'm a fan of is the newsletter as well, which is another great way to kind of stay involved and get a little bit more of that context that happens in between the numbers. Tell me a little bit about that newsletter and how you guys put that together. Is that something that you're doing? Is something on your team that's kind of leading with? Where's that information coming from?
Yeah, that newsletter we started earlier this year. My co-founder Eddie was like very into newsletters. I think he read like Morning Brew for the past few years and like wanted to do it just even from like a startup perspective. And so yeah, we just started putting out content. I write it bi-weekly, and so basically we cover like the latest mining economics, whether it's rig or hash price, and then some mining news and gossip. I mean, who doesn't love gossip? So we try and like consolidate into the inbox. Obviously, the big news this morning was like the whole layer one thing. It just came out, I guess, an hour ago that layer one's CEO Alex Legal got kind of forced out and has been replaced. 2 weeks after being on that 30 under 30. So yeah, we try and bring like those economics, the mining news, gossip, and then educational content too, all in one place bi-weekly. So hopefully it's not like mining overload, because I would say like 75% of our readers are actually not from the mining industry. They're kind of either investors, financial service guys, or whoever just kind of looking on the outside in, and potentially like that information can help them get in. So we try and like tailor it towards that.
Yeah. Look, again, it's pretty easy to own Bitcoin without ever understanding a lick of what's going on the side. However, if these type of resources exist, you should be looking at them. This is why we're highlighting this as one of our 21 days. And we're also doing it right before everyone is kind of off with their families for the holidays. So tell your family about this too if they're looking at how to get involved in Bitcoin and you're looking for other ways to get them in there. This is, again, one of my favorite kind of corners of the Bitcoin industry to look at what's going on. Hashrate Index has definitely made an impact in my life personally. And so I really appreciate, Ethan, the work that you guys are doing to create this. URL is hashrateindex.com. It's pretty easy. So if you're confused on how to get there, now you know. What else would you like to tell us, maybe to kind of close it out? And where can we find you, and where can we find everything that you guys are working on out on the internet?
Yeah, the last comment I would say is that like all of our data sets are completely free to use. We just wanted to build cool things for people to use. So if you have any ideas and interesting analysis you want to see, just ping me on Twitter, Ethan_Vera. And like almost everything you see on this website is user driven. And so people are giving us like, hey, I want to see this, I want to see that. So that's how we build it. So if you have an idea on things you want to see, just hit me up. And yeah, looking forward to getting that feedback and improving the site. And thanks a lot for having me on. Looking forward to seeing the rest of the series.
No, I appreciate it. Now that I know I can use the data, now we're going to have 22 days of data. So we're going to move proof of keys back one more day to make room for all this great stuff. All right, Ethan, thanks so much. We'll talk to you soon.
Thank you.